You have everything they asked for. You have a job. You have a pay stub. You have 6 months of rent saved in cash, sitting in your account, ready to hand over the moment someone says yes. You are standing outside an apartment building on a Tuesday afternoon. The listing said $1,400 a month. You did the math. You can afford it. You even rehearsed what you were going to say in the elevator on the way up. The landlord sits across from you. He types something into his computer. He looks at the screen. Then he looks at you. Then back at the screen. I'm sorry. We have a minimum requirement of 620. You're at 580. What's 580? He is already looking toward the door. You ride the elevator back down alone. You stand on the sidewalk with your pay stub still in your hand. You did not lose the apartment because you could not afford it. You did not lose it because you had a bad history. You lost it because of a number you did not even know existed until 30 seconds ago. That number has been following you since the day you turned 18. It was in the room before you arrived. It spoke before you opened your mouth. And here is what nobody told you. That number does not just decide whether you get the apartment. It decides how much you pay for your car, whether you get a job, how much your insurance costs, how much extra you will pay throughout your life for every single thing that requires someone to trust you first. The difference between a credit score of 580 and one of 800 is not just a better score. It is a different life. And the people with scores of 800 did not get there by accident. They knew the rules before the game began. Now you are about to learn them. You go home and look it up. FICO, the Fair Isaac Corporation, a company founded in 1956 that decided, decades before you were born, that your entire financial trustworthiness could be expressed as a single number between 300 and 850. You learn how that number is calculated. 35% comes from your payment history. Whether you have paid your bills on time, 30% comes from your credit utilization, how much of your available credit you are using. 15% comes from the length of your credit history, how long your accounts have been open. The rest comes from a combination of new accounts and different types of credit. You read all of this and realize something. You have not done anything wrong. You simply have not done anything at all. You have no credit cards, no loans, no history. And in this system, no history does not mean no risk. No history means unknown risk, and the unknown is treated as dangerous. Your score is 580 because you are invisible. And being invisible is expensive. You find another apartment, a different building, a different landlord, the same city. She is willing to accept you, but she wants a 3-month deposit instead of 1 month. The first apartment wanted $1,400 up front. This one wants $4,200. You think about your coworker, Ryan. You started during the same week. You earn the same salary. You have the same job title. You work for the same company. Ryan moved into a building 2 blocks from yours. His deposit was 1 month, $1,400. You paid $4,200. Ryan paid $1,400. The same city, the same week, the same income. A difference of $2,800, and neither of you said a word about it. You did not know to ask. Ryan did not know to tell you. The system simply charged you an extra $2,800 for the crime of not having a number that nobody ever taught you how to build. You sit in your new apartment, the one that cost you $2,800 more than Ryan's, and you think to yourself, okay, this is a game. I did not know the rules. Now I know one of them. What you do not know yet is how many rooms this game contains. You do not know that $2,800 is the smallest number you are going to write down. 18 months later, your score has climbed to 640. You have paid your secured credit card on time every month without fail. The card has a $500 limit. You keep the balance below $150. You have read enough by now to understand that utilization matters. Payment history matters. The system watches every move you make, even when you are not watching it back. 640 feels like progress. It feels like the system is finally beginning to see you. Then your car breaks down. Not completely, just badly enough that you need a loan. You need $12,000 for a used Honda that can get you to work and back without sounding like it might die at every green light. You go to the dealership, they run your credit. The finance manager returns with a number, a 14.9% interest rate. You sign the paperwork because you need the car. 3 weeks later, you find out that Ryan bought the same model, the same year, the same mileage, a different dealership. His interest rate was 6.1%. You take out your phone and do the math right there in the parking lot. The same car, the same loan amount. Over 5 years, you will pay $4,300 more than Ryan in interest alone. Not because you chose a worse deal, because your number was lower when you walked through the door. Then comes the job application. A company you have been watching for months finally posts an opening. You apply. You make it through 2 rounds of interviews. Then Human Resources sends you a form asking for permission to conduct a background check. Standard procedure, they say. It includes a credit check. You never hear from them again. You do not know for certain whether that was the reason. You will never know for certain, and that is the part that stays with you. Not the rejection itself, the uncertainty, the possibility that a number on a screen answered a question about your character before you were given the chance to answer it yourself. Then your car insurance renewal arrives. The same car, the same driving record, no accidents. Your annual premium has increased by $400. You call and ask why. The representative tells you that the price is based on a number of factors. She does not tell you which factors. You already know. You sit down and add everything up. 18 months, $2,800 in additional deposit costs, $4,300 in additional car loan interest, $400 in additional insurance premiums, and a job you may have lost before the interview process was even over. The number is not just a score. It is a tax, and you have been paying it without ever seeing the bill. 4 years into the game, your score reaches 740. You understand what that means now in a way you never could before. You have spent 4 years learning rules that nobody bothered to post on the wall. Pay on time. Every time. Keep your credit utilization below 30%. Do not close your oldest accounts. Do not apply for too many new accounts at once. Protect your oldest credit card as though it were an important document that could never be replaced. A score of 740 means the door opens differently. Not all the way, but differently. You apply for a mortgage. $350,000. 30 years. The loan officer checks your score, types for a moment, and offers you an interest rate of 6.2%. You remember something you once read? You go home and run the numbers. At 6.2%, the total interest paid over 30 years on a $350,000 mortgage is approximately $421,000. Then you look up the rate you might have received with a score of 580, 8.5%. At 8.5%, the total interest on the same loan would be approximately $584,000. You write both numbers on a piece of paper and place them side by side. $421,000, $584,000. The difference is $163,000. The same house, the same loan, the same 30 years of payments. $163,000 more paid to a bank for no reason other than the number you had when you walked through the door. You sit with that realization for a long time. $163,000 is not a penalty for being broke. You are not broke anymore. You have not been broke for years. It is the penalty for being 22 years old, standing on a sidewalk with a pay stub in your hand, with no idea that a number you had never heard of had already decided what everything in your life was going to cost. You cannot get that money back. Nobody will return it. There is no appeals process, no refund, no acknowledgement that the game began before you even knew there was a game. But your score is 740 now, and 740 is not the top. You have come far enough to know there is another side to this. You have calculated what it costs when the number works against you. Now, you're about to discover what happens when it begins working for you. 800. The first thing you notice is that the direction of the phone calls changes. Now, your bank calls you. Not to collect money, not to inform you about a fee. They call to offer you a lower rate on a mortgage refinance you never asked about. Your credit card company sends you a letter. Your credit limit has been increased. No application required. No explanation provided. The number moved, and the system quietly rearranged itself around the new number. You decide to refinance your mortgage. The first rate they offer is 5.6%. You negotiate. They lower it to 5.4%. Not because you are charming, because a score of 800 means they want to keep you, and being wanted is a very different conversation from asking for permission to enter. Then, one evening, you are at dinner. You meet a friend of one of your coworkers. He spent 30 years working inside a bank, not as a teller, not as a branch manager. He was someone who understood the architecture of the entire system. You ask him the question you have been carrying for years. Why does nobody teach this? Why did I learn about the system for the first time only after it rejected me? He looks down at his glass for a moment. Then he says something. My children have been authorized users on my credit card since they were 16. Their credit history started at 16. By the time they needed their first apartments, they already had 6 years of credit history. Their scores walked through the door before they did. For a moment, you say nothing. His children did not work harder than you. They did not make better financial decisions than you did at 22. They simply started the game from the inside. You were still standing outside, unaware that the door even existed. The authorized user strategy is legal. It costs nothing. It is not technically a secret. It is simply information that moves through certain families and not through others. And the families that never receive that information pay for the gap. They pay through higher interest rates, larger deposits, higher insurance premiums, and jobs they never even find out they did not get. The game was never random. It was never neutral. It was designed to reward the people who already knew how to play, and it was never designed to explain itself to those who did not. Sometimes you drive past that apartment building, the building where the landlord looked at his screen and then looked toward the door, the building where you rode the elevator down alone, still holding your pay stub. Your credit score is 803 now. If you walked through that door today, the deposit would be $1,400, the same amount Ryan paid 4 years ago, not because you have become a different person, because the number changed. And the number was the only thing that building ever wanted to know about you. You stand outside for a moment. You think about the younger version of yourself who stood there the first time, 22 years old. Your first real job, 6 months of rent sitting in your bank account, completely convinced that having the money was the same as being allowed to use it. That version of you did not know the game had already begun. You did not know that somewhere across the city, teenagers were being added to their parents' credit cards at 16, building credit histories before they had anything to borrow money for. You did not know that interest rates, deposits, insurance premiums, and job callbacks could all flow from a single number, a number that moved through some families as common knowledge and reached other families only in the form of a rejection. That younger version of you was not irresponsible. You were not careless. You were not the kind of risk the system decided you were. You simply were not told. Here is what the system will never say out loud. Your credit score is not a measure of your character. It is not a judgment of who you are or what you deserve. It is a number produced by an algorithm designed to reward the people who already know how to feed it and to charge everyone else for not knowing. People with scores of 800 are not necessarily more disciplined than you. They are not necessarily more trustworthy. Some of them started at 16 with 6 years of credit history handed to them before they received their first paycheck. Now you know how the number works. Now you know what it costs when the number is low and what it can unlock when the number is high. The game did not change. You finally learned the rules.